In today's video, we're going to be talking about risks. And some of you are wondering, TJ, is there any risk in property? Well, my good friends, it's an investment. In any investment, there is some form of a risk. I got married a few years ago. It was a great risk that I took to just get married. So, how do we mitigate for some of these things or for some of these risks that we see? I've been in property for a while, and investing is what I do here. And every Monday we come here and we teach about property investments, how to do it, what to look out for, what to do, what not to do. And this is just basically talking about what I currently do. So today I decided, in my wealth of 10 years plus, in my wealth of doing many deals that I've done, what are some of the main key risks that I would talk about, and potentially if anybody else is maybe starting off, scaling off their business, they would find value in. And in today's video, my good friends, let's talk about the investing part of real estate. And whilst we are talking of that, let's remove the big R in the room, which is the risk. If we are meeting for the first time, my name is TJ, your host, and I'm a former banker and founder here at the TJ Tribe. And I do business with a focus in student accommodation, flips, which is buy and sell, and coaching, with the hope that all of us, as young, upcoming modern parents, we can be able to have passive income from real estate. Welcome to the channel. Waking up alone has its own risks. You could be sleeping on a bed, right? Like that. And now you put your leg on the floor. That's taking a risk. Drinking water. It comes with its own risk. It might go on the wrong side. It's a risk. But I'm here to share with you so that we don't have to think about the risk, but we can think about the risk and the mitigation thereof. And in today, I want to share this with you. So investing in property can be a fantastic opportunity. It is. But like in any investments, there is always a risk. It comes with it. It's inherent. There is always going to be risk. So let's break down some of these risks. And risk number one that I want to mention to you, my good friends, is the thing that is called market volatility. Some of you don't know what that is. Don't worry. The market is not stable, right? It means that each time we are buying something from an investment perspective, we are expecting a certain return. But what if it goes down? What if it goes up? I've been investing not so long ago. I think in the last 5 years, I invested with a few of some of my good friends. And within this, the business was going well. So it was great. Whilst it was good, however, it went down. And for some of my friends, they didn't like that. But that's what happens. The market changed, so it's volatile. So it's the up and the downs of the market. So as we are talking, I want to speak a little bit more on this. What do they mean by market volatility? Market volatility, my good friends, is that the prices of the properties in South Africa could be unpredictable. Right? It's influenced by many things. Today, the president will say something else. You remember back in the days when we had President Zuma, and some people would say, hey, when the president speaks, the rand drops or the rand picks up. All of that is determined, or should I say, it comes into the volatility. So what influences the volatility? Number one, the economic conditions of the country. Right? So we might have investor confidence, so which means that prices are going up and the investors are coming and backing us up. So that's number one. Interest rates, right? Interest rates is one thing that also affect the market volatility. And then obviously, if the country is stable from a political perspective, you all remember when we had the uproars. I think it started off from the Durban, or should I say from KwaZulu-Natal, and it just went into all the areas. That was an instability, so political instability. So would people invest? Would the prices remain the same if the political environment is not stable. So that's market volatility. We need to be able to say the mitigation to this of market volatility is we want to be able to buy right. So never buy high. So meaning that when the properties are selling at the high, it's not the right time for you to buy. Or should I say that's not the right deal for you to buy, because you might struggle to sell it again. So always do what we call thorough DD, dive in deep. No, it's not that. DD just basically means due diligence. So do your due diligence correctly. The second one I want to speak to as a standalone is political and economic uncertainty. My good friends, we have had so many things in our market. We are a very vibrant, complex political country, if I may call that, landscape, if I may call it that way. And we have had issues in the past, the likes of load shedding. So that also influenced the prices of whether rent is going up, whether rent is going down. So the volatility of the market. But remember, now I'm talking about point two. The first point that I spoke about was market volatility. And this one here is about political and economic certainty. Is there a future in this market? Things like, for instance, outside just the load shedding that I spoke of, someone could say, hey, what about the unemployment rates? So if you're buying properties in a specific area and the unemployment in that specific area is very high, who is going to rent from you? Remember, we are about property investment. So you need to think of it nicely to say, in this market that I'm jumping into, who is my tenant? So another one which we could also add on here, which I don't think that for us modern parents, it really affects us, is this whole story that's been around post-independence of South Africa, which is the land expropriation. You know, I had to break that word to pronounce it correctly, right? It's not my everyday word. The land expropriation, what it basically means is that it can also cause a huge impact. But I don't buy any farms, but you know, I've bought a farm before, so you know, I could have been affected with that. So what I'm basically saying here is that it's a big thing here. And we had recently the United States President Donald Trump says that, you know, South Africa, that's what we're doing. And look, I'm not a politician, but I watch what the politician says because it sways where the economy is going, and we need to dance with it as it is going along. The third one, which is also a huge impact, and a lot of people don't really put this into perspective, is the high interest rates. So it's a risk, it's a huge risk, but we can mitigate that. High interest rates, and obviously not just high interest rates, but the financing challenges of real estate can be a huge thing. In South Africa, we've had interest rates, I think for the longest time, if you're a new parent, a modern parent, you would have realized that within the last 20 years or so, interest rate has been potentially be around about 10-12%, round about there. But my good friends, I think it was in the late 90s, interest rates at one point, they skyrocketed all the way to 24%. If I'm not mistaken, do your homework, jump onto the Google and just check. I think it was, I think 99 or 98 or 97, somewhere there. My mind tells me that. And based on my research, we did that research a long time ago, just trying to see if we were to buy properties, what returns should we be looking at if the interest rates is going to come back again at whatever point. How do we restructure these things? So obviously the banks are there to lend you some money, but interest rates in South Africa can, I want to say, it's a given that it's going to fluctuate. The governor comes out all the time telling us it has gone up, it has gone down, and we need to be looking out for that. Now, obviously borrowing high, on a high cost, it can obviously eat up into your profits, and we want to avoid that. Always buy, making sure that this is the mitigation. Always buy knowing that if your interest rate is higher, can you weather the storm of a big interest rate? Hey, my friends, I'm very sorry that I have to disturb the amazing conversation that is happening. But I thought, let me just jump in here and give you a little bit of a good word of a service that I utilize, which is called Expelo. You might have never heard of them before, but basically, what Expelo is, all of us who are here, we do property investments. And as and when we do property investments, we have properties that we have and we take insurance on that. And we also have tenants that we've got. And at some point, these tenants tend not to pay. It's a reality in our market. At a national level, they generally say around about 20% of tenants fail to pay. If they fail to pay, what is the recourse? You probably now need to evict them, isn't it? And the cost of evicting anybody, even the going through of that process, can be extremely tedious. And my friends, that's where Expelo comes in. I utilize Expelo myself in all my properties that I've got. The Expelo company, what they basically do is that I said to myself when I was trying to explain this to my wife the other day, and I said to her, babe, Expelo to us is the big brother that we pay on a monthly basis, and as and when we ever have a delinquent tenant, a tenant that is not paying, we can always call on Expelo, and they will do the eviction for us. We don't need to worry about it. They'll handle all the legal fees. They will do everything in ensuring that this tenant is evicted. So, my friends, I just thought that it is unfair of me not to share with you this information. So, on the screen right now, it's the details of basically how you can reach out to Expelo and you can claim your discount. Well, you might not be able to get the entire link because it's on the screen, but if you have to click in the description of the video, you'll be able to see the same link that is in here that says expelo.link/TJ Tribe, and that's to get you your discount. So, my friends, don't be caught with your pants down with your tenants and they become delinquent and you fail to evict them. Just go to Expelo. But for now, let us go back to that interesting conversation that we were having. Thanks for watching. The fourth one that I want to speak to you guys is about the vacancy and tenant risk. Woo! I can do a video on this one alone because I've had many stories about vacancies. During COVID, I remember I had a couple of buildings in the lower market and some of them, they were full, but the tenants were not paying. It's a reality. You need to think about that. There's different strategies that you can deploy, but the bottom end of it is that you do not want to have a higher you don't want to have a higher vacancy rate on your properties because obviously that's going to eat up on your profits. People are doing rental defaults. Now you're going to go through what we call rental litigations. The process is long. The process in South Africa tends to favor the tenant. So what is a good tip? The good tip here is that whenever you are having tenants in your property, this is a must. Do not just take on anybody and put them in your property, especially if you're doing this as a business. Screen. I'm going to repeat that again. Screen tenants carefully and consider rental insurance. And my good friends, we've got that other product from our friends from Expelo who have been generous to us over the years. They have given us that product at a very good discount, and this is to mitigate vacancies. Right now, the last one that I want to speak to, second last, is the crime and security concerns. Well, as a country, I don't think that anywhere in the world there is countries that don't have any crime or security concerns. I think it's there everywhere. It just depends on where you are staying. Now, this can obviously impact your investments because Imagine, I don't want to say imagine. I know quite a few people that cannot go into certain areas today, but they have investments in that area. So if that's the case, is your investment safe? The whole thing here that we need to be thinking about is that how can you be sure to consider, I want to say, how can you be so sure that your property or wherever it is, whatever investment that it is, not just property, how can you be sure that the security is there? So which means that whenever you're now having the property, your investments available, be sure to consider security costs when calculating your investments, making sure that you can cover for that extra insurance. Like for instance, in our student accommodation, we've got securities throughout the properties. We've got security inside the properties. We've got securities outside. We have joined up with other investors in the areas and the communities where we are in the roads. We've got security cameras, and we have had to do this because obviously we're not just managing any other tenant. These are kids, so we are also highly worried about their concern. Now, the last one that I want to speak to here, my good friends, and by the way, hey, if this is of great value to you and you have never subscribed to our channel, hit the subscribe button, and also don't forget to share some of this important stuff. Mondays is about teaching. We learn here. That's what we do. But above that, I also want to throw in something here. Today, in the month of February, I am going to be able to give one book, and I want to give you guys I don't want to say one of the greatest book, but the greatest book that has helped me over the years. And basically this book here by Robert Kiyosaki, which is called Rich Dad Poor Dad. If you've never read it, it spiked, created awareness in my thinking of how to do things differently. I was already in business when I started reading this book. My wife bought it for me, and I read this book, and I am going to do a draw in March for everyone who is going to be commenting in February. So here is how we're going to give out the book. So this is one book that we're going to give out. In the comments, I would like you to comment with the word Feb, F-E-B. So you start commenting with that word. You say Feb dash, and then you do whatever comment you're going to comment on this particular video. And within this video, my good friends, I would like you to, the question that I want to ask of you, and we want to participate. This is education, right? I'm not the only one who wants to be a teacher here. I want you to teach us as well, based on your experience, because that's what this channel is built upon, our experience. So, number one, what you need to do, jump onto the comments and type in Feb. And then thereafter, you are going to put a comment, commenting on my statements, or commenting on the entire video, or giving in your 2 cents of some of the risks that you have seen that we haven't spoken about. But don't just give risks. Also tell us how you have mitigated that. So for instance, if your risk is security gates, right? So you're going to say Feb dash security gates. How did I mitigate that? I installed automatic electric gates. I installed biometrics, that kind of thing. That's what we're looking for. We are here to help one another. That's what we're all here all about, my good friends. So let me jump on to the last one. And then whilst we are talking about this, so it's a competition, February competition. I'm going to give out this book. At the end of February, we're going to take all the people that have given comments, and we are going to put them on a hat, and then we will announce who the winner of this book is going to be, and we will talk about how best we can get it to you. Rich Dad Poor Dad, the book that spiked, that created awareness for me. Anyways, closing risk for me is the legal and regulatory risk, property laws in South Africa, zoning regulations in South Africa, tax policies in South Africa. These 3 things can impact your investment. I've seen it all. Whether this is capital gains tax, municipality rates. There's a property that we were buying at one point in the area. Municipality rates is generally about 2,000 Rand. This particular property was on 10,000 rand. When we bought it, it went up to 16,000. I'm like, what happened? And they said, because your property is illegally, the land use is illegal. We're like, what is that? And then we realized that before we actually bought it, the neighbors had complained that the property was being run as a brothel. And that's why the person sold it to us, but they never solved the problem with the council, and it got carried over to us, and we were paying a higher municipality rates in Durban at the time. Another thing we could be speaking about when you're now a bigger business, having, so for instance, you could be, what your business could be property rental, right? But now you're renting it out to a corporate, and maybe they are in, they would like to rent it out for BEE reasons, so for that reason, if you're not BEE compliant, that's a regulatory thing that would make you not have the business, right? Think about that. So always stay informed. I always want to say that always stay informed with anything around legal to avoid any surprises. So my good friends, I am hoping that today's video has been informative to you. Don't forget about the competition that we are running. All you need to do is, obviously, you need to be a subscriber here. That's number one. Number two, then you also need to put in a comment. You start your comment with Feb, and thereafter comment in the section. And my good friends, you stand a chance for this particular month to win this book here that I am holding here. By the way, Robert Kiyosaki didn't donate these books to us. I actually bought it, and I am going to send this book. We'll talk about how we can send this book to you. But anyways, I'm hoping that this has been great information. Until we see each other again right here at the TJ Tribe, stay tuned in, continue learning, do amazing things in your business for your family. That's all we want to hear here. And if you're wanting now to go a little bit deeper in learning, we've got a website here which is called www.thetjtribe.com, and you can jump onto that website if you're one of those people that's like, TJ, I want to learn how to do this thing, and I'm serious about it. I've got a job, I've got a bit of cash, and I want to make this thing real. Now, my good friends, we can talk about that, and yours truly will take you through into some hard learning for a period of a year, and we can give you some good learning. So until we meet each other again right here at the TJ Tribe, my good friends, it is I, your boy. Boom! We'll see each other in the next video.